So AR and VR have seen volatile levels of interest and investment over the past 24 months. And like past technological waves, the hype isn't necessarily wrong, but it is early. So Artillery Intelligence ventured to quantify these sectors in more precise terms in our latest industry revenue forecast. And the high-level summary is that global total XR revenues will grow from $3.8 billion in 2017 to $56 billion in 2022. And that includes AR, VR, and the enterprise and consumer segments of each. So where's that money going? The largest subsegment is enterprise AR, which will comprise about half of all XR revenues by 2022. And that has a lot to do with the scale that's achieved through wide applicability across enterprise verticals and a form factor that really supports all-day use and clear ROI for enterprises. And that's considering speed and error reduction and overall efficiencies gained in areas like manufacturing and assembly. But even despite those advantages, there's enterprise resistance and risk aversion, and we're currently seeing that kind of slowly chipped away, and we believe the momentum will build up to a tipping point in 2020, after which we'll see accelerated adoption. So it will build slow and then happen fast, just like we saw with enterprise smartphone adoption about a decade ago. Sticking with AR, its consumer segment is the second largest subsector in the outer years of our forecast, with 2022 projected annual revenues of $16.5 billion. And that's really driven by mobile AR in the near term, given its scale and installed base of compatible smartphones. So that means the revenue source for consumer AR won't be hardware and smart glasses, but rather software from mobile AR apps. And that'll evolve from the business model validated by Pokemon Go, primarily in-app purchases. But what everyone's really waiting for is an AR killer app, which we could see emerge sometime in the next year when AR developers truly gain their native footing. And we believe that'll be social or gaming oriented and rely on the developments of the AR cloud, such as multiplayer support and image persistence. And as a historical comparison, it took 2 to 3 years after the first iPhone before we started to see killer apps such as Waze and Uber and Foursquare in the kind of 2009-2010 timeframe. And we could see that same timeframe elapsed from last year's AR kit launch, not to mention the same lesson in native thinking and UX that brought us those killer apps. As for VR, it's actually the opposite of AR in that consumer markets will lead its revenue growth versus the enterprise. And that has a lot to do with VR's form factor alignment with gaming and entertainment. It will find a home in some enterprise functions like training and data visualization, but its revenue potential will be a bit limited there because its isolation inhibits industrial job functions and share of time per working day. So consumer VR, on the other hand, will start to accelerate this year due to Oculus Go, which carries the advantage of price and a solid spec sheet and a rich content library inherited from Gear VR. And with a giftable price tag of $200, we believe that this holiday period will be a moment of truth for whether or not it can be that accelerant. And a lot of this stems from the fact that Oculus, with the advantage of Facebook backing, has the flexibility to apply loss leader pricing to trade margins for market share, which is pursuant to its long-term game of a platform strategy. And that applies to the entire line with Go and Rift and Quest, which will launch next year. So altogether, it'll have strong competitive position versus players like HTC and Samsung that are more dependent on nearer-term hardware margins. So that really just scratches the surface. You can read more in the full report, and stay tuned for lots of analysis and narratives as we continue to unpack this massive data set and update it twice per year in what will certainly be a moving target and an exciting time, though perhaps a bit delayed, for immersive computing.